Welcome, everybody. My name is Chris Tilson. I'm joined today with Natalie Wexler from Adyen Capital. We'd love to hear a little bit about a background of yourself, but also what is Adyen Capital?
I have been in the payments industry for almost 15 years now. So very, very passionate about money movement, what it means to customers, particularly small businesses is where I've really focused a lot of my time. When you think about capital, what is it? It's essentially working capital that allows small businesses to really fuel their business. Now, it can be something that is used for an emergency. Something happens, you need new materials, maybe you need to make payroll, or you have an opportunity to look at investing in your business. Is there a growth opportunity? Do you see something that you can be doing with some extra cash?
What would be the difference between Adyen Capital and, for say, going to my bank and trying to get a loan the traditional way?
Historically, traditional banks have had offerings for capital to small businesses that actually weren't built to meet their needs. They were actually built for enterprises. Essentially, what small businesses need to do is they need to pull together their 1099s from the last several years, print them out, take them down to their traditional bank, the brick and mortar, go through a lengthy application process. They need to wait 6 weeks or so of cracking their books, answering a ton of questions to potentially either be declined or be offered a loan that just doesn't meet their needs. It's either too small or the rates are too high, or it's just not exactly what they need after having waited for so long. A lot of small businesses don't have 6 weeks to wait. A lot of small businesses, especially in the US, only have 27 days of capital on hand. That doesn't give them a lot of flexibility. So when you give that context of what historically a traditional loan process as well as outcome can be, it's very, very different from when you think about revenue-based lending. When you think about revenue-based lending, essentially we can see how you operate as a business. We have a lot more confidence in your ability to repay, to actually continue to process, to continue to be in business and transact. So we can get a lot more comfortable quickly with offering loans to small businesses. And I think quickly is also a key term here. Not only is it quick for the application process, it can take moments. And it's because the loan is already visible to the small business. You can click on a button and just have the process begin in moments. But then also those funds can be available to you in moments.
That's pretty awesome, especially in today's world where all consumers expect that instant gratification, right? Whatever we're buying, it's Amazon has ruined us all. And so we expect that instant gratification and things to happen in an instant. So why would this be any different? Tell me about the scrutiny, perhaps, of what's the loan for? What are you using the money for? Obviously, traditional loans put you through the ringer of like, is this a wise loan for them? How do you guys view that?
We have an algorithm that runs on the back end that a small business owner does not need to come in and say, hey, can you please see if I'm eligible? We do that on the back end. And so we only offer the loans and the grants to the small business if we do believe that it's the right thing to do. So starting from there, right, the small business does not have to come in. We do it proactively. When we actually get to the point of saying, okay, this makes sense for Goose as well as it makes sense for the small business owner, we don't ask them to tell us what they're going to do with the funds because there are a variety of ways that they could use them, but we do ask them to attest that it's only for their business. So they have to check a box that says, no, I'm not going to use this for vacation, for instance, right? It really is meant to help your business either keep the lights on or grow.
Do you have any advice on the timing of that? Obviously, these are seasonal businesses in many cases. So the ebbs and flows of cash flow can vary quite a bit throughout the year. Are you guys just normalizing that activity across the year? Is that how you look at it? Or do you see opportunities to have a bigger opportunity for a loan maybe in the peak season of summer versus the doldrums of winter?
The way that it works is the algorithm continues to run on the back end. Again, no work for anybody. It's just running on the back end. And the loans are visible to the small business in their environment, in the Goose environment. And so as you know your business best and the seasonality is coming, you're probably going to want to have that as cash on hand. So I would recommend that you be proactive and preemptively get it, because quite frankly, if your transactions are going to drop over time, you're probably going to see a lower loan amount in a month, 2 months, 3 months, right? Because it is based off of historical data. So it's something that you'd probably still see something available, but if you already know that that seasonality, that drop, that dip is coming, good thing to be thinking about making sure that you're ready for that time.
What are some reasons that businesses tap into this source of funding?
So we see a lot of businesses use it for two different reasons, so two different buckets of reasons. One is emergencies, working capital, need to keep the lights on, and the other one is investment and growth. So on the first side, emergencies happen. And like I mentioned, 27 days of cash on hand is not a lot for a business, for a person. It's the kind of thing, if an emergency comes your way, you need to be prepared. So it's a great thing to really make sure that Goose, for instance, has your back and you're able to actually access funds that are based off of your future transactions. So we see a lot of that. And that's pretty much the extreme if there's an emergency. But working capital also, right? Like payroll is coming, or I need to invest in buying new tools, or I need inventory, whatever the case may be. Just making sure that your business is prepared to continue to stay in business is important, obviously. And then aside from that, the other bucket is the investment in growth. Is there a new opportunity? Can I open a new location? Or can I invest in better tooling? Whatever the case may be, to make sure that your business is growing. You're doing great, you're transacting, you have customers. How do you take it to the next level? You have access for that to make sure that you can invest in your business.
So I'm a small business. I take that leap and I take a loan from Adyen Capital. What should I expect? Like, what are typical terms? What does that look like? I know it probably varies across the board, but is there a general guideline for what to expect?
So it's based off of your own history. So no two are the same, but it is a loan. And so typically what we do is we look at having a time period of 6 to 9 months to pay back. So it's a short-term loan. We go somewhere between $500 to up to $50,000 available. Again, really dependent on your personal history. And you have the ability to change, to toggle between the amounts. So we may offer you, for instance, a $20,000 loan. You only need 10. That's totally fine. Aside from that, you'll be looking at a repayment rate. And what that means is that we don't have a set dollar amount that you have to pay every month. Now, the reason we don't have that is because you are a seasonal business. You may have some good months, you may have some quieter months, and we really want to allow for that flexibility. So essentially what we do is we say it's going to be X% of your daily sales. That gives you flexibility that you're still on track to pay, but at the same time, it's not hurting you on a day-to-day basis because you have this really high set amount.
Is there a range of typical interest rates somebody can expect?
It's actually not interest. And I want to call that out because that's actually something that as a small business owner, you want to make sure that you take a look at, because interest essentially is a percentage of the lent amount, and that can change. It can compound. You can also have late fees. You can have all different types of fees that you may not be able to prepare for. The way that our offering works, the way that our loans work, is we tell you up front, this is how much you are going to pay for this particular loan. That's it. Doesn't compound. It doesn't change. You can predict it. It's not even predicting. You actually just know what it is.
How about one piece of advice that you would give to first-time borrowers who, are a little bit leery about doing this new age type of lending? If maybe that's not the right term, but it's a new type of lending available to these businesses who are online and they're so used to going to their traditional bricks and mortar bank. What are things to look out for, even about weighing the pros and cons versus one versus the other?
It's not brand new. So it is established. It has been tweaked. It has gotten a lot better. So we know it works. And the reason we even created this type of product where we do look at your revenue, base all loans off of that versus the traditional process, is because that traditional process was not built to meet the needs of small businesses. You don't have time. You need it to be fast. You need it to be easy. You need it to be predictable. You need to make sure that you can go back to doing what you love most, which is focusing on your business, not running it. And so when you think about what to look out for, what some of the differences are, I'd say the first thing is the simplicity, right? You're sitting in the Goose environment. You see the offer. You can just click on it. And within moments, you go through the application. And within a couple more moments, you also have the funds. Major difference versus getting together all of your documents to prove your business to a traditional bank. Takes 6 weeks. You don't know what you're in for. You're waiting. You may be feeling the pain in the meantime. So very, very different. I'd also look out for what the fees are. I'd really make sure that you understand, because as I mentioned on the Adyen product, it's just a flat fixed fee. It's not variable. It doesn't change. We don't have extra fees. It's just one. Whereas you may want to take a look at what a traditional bank will give you, which is interest rate, compounding, late fees, potentially a prepayment penalty, all these types of things that can be things that at the end of the day come out of your pocket.
I picked up on a word that you used. It happens in moments. If I'm a Goose user, I'm in my admin interface. How long exactly is a moment? Like, am I talking the same day? Are we looking over the period of a week? Like, how long does it take typically? It can vary from user to user, I'm sure.
I say moments because each user is different. How long do you want to take to decide how much you want? How much do you want to toggle between the amounts and run your calculations? The offer is there. You click the button. Let's say you love what you see right away. You click it again. You go through the T's and C's, which basically say, I will continue to do business with Goose, and I will attest that I'm spending it on my business and not for personal reasons. You click that. We say, okay, that's great. And because these loans are pre-offered, they're pre-approved, we don't have to underwrite. That whole process doesn't happen. We say, okay, now Adian is a bank, so we have these funds on our own balance sheet. So we will go ahead and deploy them pretty much right away. So the whole process can take minutes between the time that we get the confirmation that the small business would like to have the loan. It depends. Now, if you're doing an end of day, for instance, that's something where it may have to wait till the next day. But typically, it just takes a few minutes.
That's incredibly awesome. I mean, for any small business owner to know that they have that safety line right there at any moment is pretty powerful. So this is just an awesome product. I appreciate you so much for coming on with me and explaining how this works. Are there any other areas that we didn't touch on that we need to expose or dive into, or you want to kind of call out?
I would say, back to your question around what I would say to businesses that haven't done this before, that maybe have thought about traditional loans and haven't really explored going this newer route, I would say don't be scared. This was created because of the pain points that you told us. Right? How long, how expensive, how difficult, all the pain points. We have had this product in market for several years now, and we have seen 80% of customers, of businesses that take out a loan, get a second one. So it works. We've also seen increases in revenue. We've seen businesses be able to keep the lights on when they weren't able to before. So I would say try it. So it's a really nice way to think about having, just like you said, Chris, like a safety net for your business, as well as a tool to invest and help you grow.
Yeah, I mean, it sounds like a great opportunity for anybody, especially small businesses who at times can experience a little cash crunch from time to time. So Natalie, I can't thank you enough for coming on, talking with me and sharing about the Adyen Capital product. I look forward to, broadcasting that availability more over the future and letting our clients know that that is something available to them. I'm sure many will tap into it and take advantage.
Absolutely. Really looking forward to it. This is one of my favorite products that we have because it really does change the way that businesses do business. It really gives them access to the funds that they truly deserve.
There you have it. Natalie Wexler, thank you so much. And we'll look forward to talking again.
Thanks, Chris.